Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, what's at stake in ExxonMobil's shareholder vote? The company's months-long battle with activist investors pushing for lower emissions has culminated in lawsuits to quash these activist proposals. And that litigation has cost Exxon the support of another stakeholder, CalPERS, the largest public pension fund in the United States. CEO of CalPERS, Marcie Frost, explains her position and her plan to vote against Exxon's board.
The boards of these companies have a responsibility to represent the shareholders, and we believe that they've failed in this case by allowing this litigation to move forward.
And the other side of the debate, the U.S. Chamber of Commerce SVP Tom Quaadman on why the U.S. Chamber joined Exxon's lawsuit against the activists.
Taxpayers and pensioners in California should be questioning CalPERS as to why they're attacking a high-performing, very profitable company.
Plus, after decades of overpopulation worries, economist and professor Melissa Kearney says we now have a much bigger fiscal problem on our hands.
We don't have an example of an advanced economy whose working age population shrunk, and yet they maintained great economic dynamism. This is why I see this as a real major economic challenge that we need to be paying attention to.
It's Wednesday, May 29th, 2024, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Andrew Ross Sorkin. Joe is off today.
And with some news just out from Anglo American, the company just rejected a request from BHP Group to extend takeover talks. This is the deadline for discussions loom. The British miner saying that BHP's latest bid failed to address the board's concerns related to a disproportionate execution risk, they said, and there was no basis, they said, for further extension. Now, the original deadline for talks was last week, but had been extended to noon Eastern time today, so a whole bunch of folks were looking at that. You're looking at Anglo American down about 1% on that news, BHP up about close to 2%. Meantime,
I was just going to say they raised their bid. This was their third bid that they put in. So it's a pretty stiff arm.
It is. They're getting the Heisman. Meantime, ConocoPhillips in advanced talks to buy Marathon Oil in an all-stock deal that could value Marathon at just over $15 billion. That's according to the report in the Financial Times. They're saying that the deal appears imminent, but talks could still fall apart or another bidder could emerge.
And Hess shareholders have approved the oil company's pending acquisition by Chevron for $53 billion. But that deal is still in question amid a dispute with ExxonMobil. Exxon has claimed right of first refusal over Hess assets in Guyana under a joint operating agreement, and they've filed for arbitration. Chevron and Hess have told investors that the pending deal would terminate if Exxon prevails because that is the most valuable asset that Hess holds. It's also Exxon's most valuable asset. Right. Exxon controls, I think, 45% of it. Chevron is hoping to get Hess's 30% stake in that. There's a question. Joint operating agreement says that in the event of a change of ownership or a change of ownership, that this would mean that essentially CNOOC and Exxon would have the right of first refusal, go in and have a bid that goes with it. There's a question. Exxon is saying they think it's a change of ownership in the company. Hess is saying a change of ownership, they think, Hess and Chevron, a change of ownership just in those assets alone. So this is what's playing out. That's expected to take some time to be looking at it. And also, I think you have regulators looking at this deal, too, potentially. Separately, Exxon is holding its annual shareholder meeting today. Public pension fund CalPERS made news last week when the CEO, Marcie Frost, announced that fund would vote against Exxon's board of directors in opposition to the company's treatment of activist investors.
At issue, Exxon's lawsuit against two activist groups, which led them to withdraw proposals for the oil gas giant to reduce emissions. But Exxon still suing them anyway. And that's what this is all about. Joining us right now, first on CNBC, is CalPERS CEO Marcie Frost. Good morning.
Good morning.
Is that a decent explanation?
It was a great explanation.
So why don't you explain your position here as it relates to these activists, which did withdraw their position.
They did.
But Exxon has a view, and we'll read a statement from them in just a little bit, but part of their perspective is that shareholders have gone wild, and that there's almost too much democracy, too many activists proposing too many different plans, some of which they have very little stake in and some of which they believe are political.
Yeah. So let me start with saying that we have engaged with Exxon. We've had a number of discussions with Exxon on this topic. My investor relations team talking to Exxon's investor relations team, multiple requests to drop the lawsuit. Again, I'm not certain the problem we're trying to solve or Exxon is trying to solve. They didn't use the system that is really in place through the SEC. So if they wanted a no action advisory from the SEC, they could have gone that route. They decided to take it directly to court, even, as you indicated, even after this proposal was taken back by the two activists.
Partially because I think they're trying to create some form of case law for the future.
I believe this is really about redefining ordinary business and limiting the number of proposals and limiting the topics that an owner like a CalPERS, because CalPERS is not an activist, CalPERS is an active owner. And so if you limit the ownership rights and the discussion topics with a company, we see that as a fiduciary risk.
Can we take it back just one step? This is happening because the SEC changed the rules for what can be brought for a proxy. And there were a lot of CEOs at the time who said that this was going to be a massive headache. It would take a ton of management's time to try and deal with it. There aren't very high bars for this. And in the case of these activists with Exxon, they've brought these proposals multiple times before and lost all the votes that they brought to the shareholders. I think Exxon's frustration with this is we keep having the same vote, we keep getting the same response, and yet we have to deal so much and spend so much time with it, which is why I think they want to have the courts rule on it, as Andrew suggested, to have some case law to kind of rule back on.
Well, I think the case law could expand again into diminishing the rights that owners have to have these discussion topics with companies like Exxon. Exxon just happens to be an oil and gas company. If this was another listed company, we'd be taking the same action. The SEC did expand a bit the topics that can be brought forward for a proxy solicitation. Those are issues that I think are material items to a portfolio like CalPERS. These are not short-term risks. CalPERS has long-dated liabilities, and so the types of topics that we would talk about with a company are going to be more in those long-dated. But I don't think that it has expanded to the point that Exxon is going to be crippled by evaluating these proposals.
How do you think about the balance, though, of what some companies would say is sort of nuisance proxy contests, the balance of trying to manage the business and providing some form of shareholder democracy?
Well, I think having the definition of a nuisance proposal, if you think about Exxon, I believe there are 12 proposals on this year's annual meeting. 12 proposals on a company that made $36 billion in profits does not seem problematic to me.
Let me read you just what Exxon says, because just in fairness for everybody here, this is what Exxon says is a statement to CNBC about this whole issue. We've engaged with CalPERS. You said you've engaged with them. They say they've engaged with CalPERS on this matter and do not understand how they can make such a poor fiduciary decision to vote against a board that has overseen the creation of industry-leading shareholder value. Far from having a chilling effect on shareholder proposals, our efforts are intended to get clarity on the rules to foster an environment for open and meaningful shareholder dialogue. If anything, CalPERS' vote against our entire board appears to be an attempt to chill shareholder voices.
So the boards of these companies have a responsibility to represent the shareholders, and we believe that they've failed in this case by allowing this litigation to move forward. I think that, Exxon is entitled to their opinion, and Mr. Woods and I have had a very lengthy conversation. He heard me out, I heard him out. We didn't reach agreement at the end of that call, and he's proceeding with the litigation, and we're proceeding with saying how problematic we think this could be in that redefinition of ordinary business.
Have you talked to other shareholders about this that are going to vote with you?
We have issued the SEC exempt solicitation. We're actually following the process that's been put before us. I think New York, Glass Lewis is not a fund manager, but it's a proxy service. They have indicated that they would be voting or advising a vote against at least the independent director, perhaps the CEO. New York has come out and said they're voting against a portion of the board. But again, it's not around, this is an oil and gas company. This is about...
Changes behavior or is symbolic? Because what happens, by the way, as you know, when something like this happens, the inherent human reaction for a board like this is to be defensive. They say, these people, they're trying to screw us. They don't say, okay, let me think about whether I'm right or wrong here, and maybe be really introspective about whether you go, especially when it's public like this. And so the question is, when you pursue something like this, what are you hoping to get in the end?
Yeah, I hope they listen. I hope that they see this as a governance issue. And remember, these proposals are non-binding. The company does not have to implement the proposals that are coming from the shareholders. There is not currently another slate of directors being run against the current board. So it's really about making sure that they understand how the owners of that company feel about pursuing this litigation. I think that has been understood.
Just to take a step back, I mean, you're in a similar situation where you are representing the pensioners in California. Do you guys regularly take votes to see what they would like to see done with their money, just to extend the democracy?
So we have very open meetings at CalPERS where we have a number of stakeholders coming forward and expressing their viewpoints on a number of topics, including how we should vote on companies in their annual meetings. So yes, we have a
And what have they said about Exxon, what they want?
It is, I would say it's mixed, but I think there's a lot of confusion about our vote. A lot of our members thought we were divesting from Exxon. That is not the case. We are fully invested in Exxon to the tune of about $1 billion. This has nothing to do with divestment or investment. It is fiduciary duty. That is one place that we agree. This is a fiduciary duty issue. Lack of access to a company for us to understand risk is a fiduciary issue.
I want to switch a couple gears. One is, and I don't know if you can comment on it yet, which is we keep talking about what's going to be the next big controversial vote, the Elon Musk pay package. You have a stake in Tesla. What do you think?
So that is one of the proxy proposals that we will take a serious look at. The team is evaluating it. But as of today, minus the conversation that is yet to happen with Tesla, we would not be voting in favor of that proposal. We do not believe that the compensation is commensurate with the performance of the company.
73%, I believe, of the shareholders voted in favor of it in 2018. A judge has said that shareholders were not informed properly.
Right.
If you talk to most shareholders, by the way, especially big shareholders, they say we were not duped. We understood completely what we were doing, and we were on board with this. Now that this opportunity has arrived on your doorstep to actually rethink this, if you will, there's a view that maybe we're not getting the value we thought we should. You thought you should get it, but he's worked, by the way, under the assumption that he was hitting the numbers and dealing with the contract. If I told you that you were being paid a certain amount of money in 2018, and then I called you and said, actually, you know what, we're not going to give you that money anymore, what would you do?
That's a great question. I would go to my board. I would talk with my board. If this was truly a commitment that was made to Mr. Musk by his board, then they should follow through on that commitment. But for us,
how can they follow through if
they're non-binding proposals? So they could follow through. They have a choice to follow through on this proposal.
So you believe that the board could still pay Elon Musk?
I believe the board, minus the court issue. So I'm not factoring in the court issue on this. But for us, the reason we do the say on pay is that the company, long-term value creation of that company, it cannot be a spike in performance, because we've seen spikes in performance at Tesla. This is about long-term value creation. And so if the board is supportive, and again, I'm not factoring in this court issue, most of these proposals are non-binding, and the court or the board could make a decision to go ahead and pay.
That's fascinating. We got to run. Last, real quick. Where do you think we are in this sort of cycle right now, and where are you moving your money?
So we have a strategic asset allocation. We are not day traders. We're not market timers. We have a diversified portfolio. We've seen the markets do incredibly well. I think we'll finish the fiscal year quite well. I think we're watching through the summer and through the fall. Credit is an issue that we're paying close attention to. Consumer credit, I think consumer credit is getting a little tight.
And a lot of money has yet to be returned. A lot of the marks in private equity, real estate, and others, you have a higher valuation in some cases, but you haven't got cash back. How concerned are you about that, and how concerned should the rest of the financial world be about the issue of exits?
Yeah, so I think, for asset managers and owners who don't have sufficient liquidity to either handle the liabilities or to do reinvestments, this could be a really troubling period of time in order, for them to continue to make pacing commitments. We're not in that situation. We can continue to make our pacing commitments as the returns have slowed. Well, not the returns, but the return of capital has slowed.
Okay.
But we are reinvesting more into private equity and private debt.
We're thrilled to have you at this table. We hope you come on back, and we'll do it. I think the last time we said was 5 years ago, so we're going to do it more frequently than that. It's nice to see you. Thank you again.
Nice to see you.
Cheese will be next.
Coming up, the other side of this debate. The U.S. Chamber of Commerce joined Exxon's lawsuit against the activist investors. Chamber SVP Tom Quaadman joins us.
Let's remember CalPERS more often than not has failed to meet its discounted rate, creating unfunded liabilities totaling tens of billions of dollars that taxpayers then have to make up.
Squawk Pod will be right back. Welcome back to Squawk Pod with Andrew Ross Sorkin and Becky Quick, where we're diving deep into the ExxonMobil shareholder vote. Now, you've already heard from CalPERS CEO Marcie Frost about her firm's side of the boardroom battle, and now we'll hear the other side.
Joining us right now is Tom Quaadman. He is the Executive Vice President for Capital Markets Competitiveness at the U.S. Chamber of Commerce. In February, the U.S. Chamber joined that lawsuit on ExxonMobil's behalf against two activist groups. And Tom, thank you for being here. Let's dig through this a little deeper. Maybe we need to back up and explain what this battle is over. ExxonMobil is suing two activist shareholders that, I believe, for the third year in a row, brought proxy requests that they wanted to put to the shareholders that Exxon thinks are out of line with what it should be considering and counter to the company's best interests. Why don't you talk a little bit about why the Chamber of Commerce decided to get involved in this?
Sure, Becky, good morning, and thank you for setting that up. Let me make 2 points at the very outset. Number one, with CalPERS, let's remember CalPERS more often than not has failed to meet its discounted rate, creating unfunded liabilities totaling tens of billions of dollars that taxpayers then have to make up, and have led to, have been a factor in municipal bankruptcies in California. So taxpayers and pensioners in California should be questioning CalPERS as to why they're attacking a high-performing, very profitable company. Number two, the reason why we're in this mess today is because the SEC has abdicated its responsibilities. Our shareholder proposal process is at best an Alice in Wonderland maze of special interest activists. At worst, it's broken. The SEC has neutered resubmission thresholds. They've repealed the proxy advisory firm reforms. They have just opened the door to any proposals that have broad societal impact. So while we have 90% of shareholders repeatedly rejecting this proposal, yet it is here again. So, unfortunately, Exxon had no alternative but to go to court, since the SEC no longer want to be an irrational arbiter here.
This is the changes that the SEC made. What was it, a year and a half ago or so when those changes went through?
A couple of years ago, it's Staff Legal Bulletin 14L, where they said broad societal impact issues are allowed regardless of what is going on in a company. What most people fail to remember with that is what is a broad societal impact in a Democratic administration is one thing, in a Republican administration, it's another. And what that means is that, both businesses and investors are caught in the middle of that pendulum swing.
So, meaning you want businesses to be taken out of politics entirely, that you don't want to be dealing with this, which is kind of similar to what we just heard from Harvard University, that they don't want anybody there making official statements on things that are not relevant to the absolute mission of the college or the university at this point.
So, well, we're talking apples and oranges, but when you're talking about a public company, right, the shareholder proposal process and director elections are geared towards stewardship, long-term growth, return, et cetera, issues like that and strategies. But instead, what we've seen over the years is that, the shareholder proposal process is now dominated by political and social issues that we know politically, right, are very divisive in our election season, but we're throwing them into the boardroom, into the shareholder meetings where they don't belong. And it takes the eye off the ball of what investors and both management and directors are working towards. So the system itself is broken. And that's why Exxon had no alternative but to go into court. It's not about limiting shareholder rights at all. It's to ensure that those processes work in the manner that they're intended for, and not to make the boardroom a political debating society.
So where do things stand with that lawsuit at this point? And What do you hope to take away from it?
Well, look, I think one, we've seen Judge Pittman has ruled that that this is not moot. Two, I believe one of the activist investors has gone back to Exxon just in the last day or so, saying that they won't move forward with this again. But I think, look, there are two things that are, I think we have to really put in context here. One is the proposals were rejected by 90% of shareholders. There comes a certain point in time where, that should not, come back. Number two, that proposal is actually designed to put Exxon out of business. So again, we've seen where companies are deciding they no longer want to go public because they don't want to deal with these issues, or we have to change these processes to make sure that they're working as intended.
What does the proposal say exactly, the one that the activists withdrew after Exxon decided to sue them?
It was about Scope 3 disclosures. They wanted Exxon to make Scope 3 disclosures, which even the SEC in its climate disclosure that was finalized a few months ago was restricted or taken out altogether. And part of it was because farmers in states that have Senate Democrats in them, petitioned the SEC to do away with that. So Scope 3 is not a measure of what actual emissions are. And it was just designed to put a company out of business, which actually raises a fiduciary duty, which I know was raised earlier this morning. But, can an investor just, purchase $2,000 worth of shares and try and foist a strategy to put a business out of business? It doesn't make any logical sense, particularly for the 90% of investors who have rejected that.
Yeah, I can agree with the prospect that you shouldn't be able to come in and buy a few shares and then suddenly wrest control of the agenda and take the focus on that and require management to come up with a large portion of their time that they're dealing with it. But what is the threshold? If it's not $2,000, I mean, CalPERS said they have $1 billion. That's less than 0.2% because Exxon right now has a market cap of more than $515 billion. What is the threshold?
Yeah, well, look, we submitted a rulemaking petition on this years ago. And in fact, in doing that, we also want to make sure that individuals did have an ability to do that. Unfortunately, we see 6 individuals who file majority of shareholder proposals, which call the gadflies in the Fortune 250. Jay Clayton, when he was SEC chair, actually put in place some very thoughtful proposals regarding thresholds for when stockholders can issue a shareholder proposal, when something that has been rejected repeatedly gets a timeout for a little while. And unfortunately, the Gensler SEC has just neutered that. So they've left in place those thresholds, which go back to 1955. So that's something I think we need to come back to. And additionally, the proxy advisory firm reforms, right, were under Jay Clayton again, were designed to ensure that recommendations were done in an open process, not a black box that activist investors could steer the advisory firms, but also base things on things like economics and return. And unfortunately, that has been done away with, and we're in court with the SEC on that issue now.
I can remember when Evelyn Y. Davis was a director's biggest issue and concern.
With her famous newsletter.
Yeah, exactly. Tom, thank you for your time today.
Becky, thank you very much.
Next on Squawk Pod, falling birth rates, what that means for the future of the U.S. economy, and how worried should you be?
It's going to take a real big investment in families in this country, a lot more support, financial support, things that make it easier for parents to combine having kids and working, really a dramatic reorientation of society.
We'll chat with University of Maryland economics professor Melissa Kearney about pro-natalist policies and what she says is the misguided fear about overpopulation. We'll be right back. You're listening to Squawk Pod from CNBC.
You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Becky Quick. Joe has the day off. According to the CDC, 3.6 million babies were born in 2023 in the U.S. That's about 76,000 fewer than the previous year, and the lowest one-year tally since 1979. Joining us with the economic implications of the declining U.S. birth rate, Melissa Kearney is an economics professor at the University of Maryland. Good morning to you. Somehow every story relates back to Elon Musk one way or another, and this is an issue that he's been talking about for quite some time, Melissa. How How bad is it, and when do we have to really start worrying about it?
Yeah, well, first, thanks for having me on, Andrew. So it's actually quite likely that in the not too distant future, the global population is going to decline. But in the U.S., we're facing a shrinking working age population pretty imminently. So I think that's something that we need to be worried about. Our working age population has been stagnant for a while. Births in the U.S. have been falling persistently and precipitously since 2007, and I don't see any reason to think they're going to turn around.
If you were going to do something about that, what would it be?
So unfortunately, the lesson we can learn from other high-income countries that have been expressly experimenting with pro-natalist policies really reveals that economic tinkering, some tax credits here or there, extended parental leave, that's not going to do it. So I think if what we want to do is just, hold steady birth rates, even at the low level they are, or turn them around to increase them, it's going to take a real big investment in families in this country, a lot more support, financial support, things that make it easier for parents to combine having kids and working, really a dramatic reorientation of society toward a more family-friendly society. Short of that, we have to think about how to. I mean,
we've been going the last 100 years the other direction, though. So, do you think there's a political? It would have to be a political will almost. What would be a good country to look at as an example of a country that's turned this the right direction?
Yeah, so this is actually a really interesting point. I think this is why this major challenge has snuck up on us, is because people have had in mind since the 1960s this misguided worry about overpopulation. So you're right, people have been celebrating declines in birth rates, and now all of a sudden we're starting to realize that that's actually going to be really bad for our fiscal situation and our economic dynamism. Who's turned it around? Japan has managed to stall the decline in birth rates. It's still birth rates in Japan are still so low that they're far below replacement level. I suppose they haven't fallen out quite as far as South Korea. They've spent 4 times as much in terms of share in their GDP on pro-family policies in recent decades. France has managed to throw a lot of support at this problem and, again, stalled out their fertility decline, but still far below replacement level. I can't really point to an advanced economy that has turned around declining fertility rates. That's the issue here. So I think what we have to think about is if we're facing an aging population, a shrinking age working population, how do we invest in a talent pipeline when there are just simply fewer workers around? That's going to take a big investment in human capital.
Hey, I just wonder what those moves are that companies do or that countries do that you think are successful. I mean, when you think of Japan as the example to this, they're doing more and more to try and get women in the workforce. It's hard to boost your birth rate at the same time you're trying to get women to come into the workforce, especially in a workforce where there aren't enough days off. There's a very serious long day that goes along with that. What are countries doing that helps? Is it spending more on childcare so that women can work and have kids? Is it doing more to pay people to stay home? I mean, it's a complicated question. And when you push on one lever, you inevitably wind up with a problem on the other side.
Yeah, let me be clear. I don't think there's any country we can point to that's been particularly successful at this. So what have countries tried doing? Much more extended paid leaves than the U.S. has, really generous child supports. If we look at Scandinavia, though, women there are still having below 2 kids on average. And so even the most generous countries in terms of the kind of supports they give parents and working parents are faced with below replacement level fertility. The issue of women working is really interesting. A majority of women work now across advanced economies, about 80%. So we shouldn't really think about women either having and raising kids or working. And I think the right way to think about any sort of pro-natalist policy is things that make it easier for parents to combine work and having kids.
Is there any economy that you know of that's had this trend line go in the wrong direction the way it seems to be going and has somehow done better on the other end of it? Meaning that the economy has succeeded despite the clear lesser number of people?
Yeah, I think the decline in population is really unprecedented in modern history. And so we're really in uncharted waters here, facing a decline, an imminent decline in our population. We've been dealing with aging for a long time, but that's going to get even more extreme. And so again, this is why this is such a big challenge. And as you said, I think it snuck up on people because people were, had this misguided idea that we should be worried about overpopulation. So we don't have an example of an advanced economy whose working age population shrunk, and yet they maintained great economic dynamism. This is why I see this as a real major economic challenge that we need to be paying attention to. And to get back to your point at the beginning, Elon Musk has been on this topic, I think rightly so.
Melissa, I want to thank you for joining us this morning. It's a fascinating one. We'll keep following it, and I hope to talk to you again about it soon. Thank you.
Thanks for having me.
That does it for Squawk Pod today. Thank you for listening, as always. You can always catch Joe Kernan, Becky Quick, and Andrew Ross Sorkin on Squawk Box weekday mornings on CNBC starting at 6 a.m. Eastern. And the best of that TV show is always right here on Squawk Pod. Make sure you follow us wherever you're listening now. We'll meet you back here tomorrow.
We are clear. Thanks, guys.